Rajiv Jain, who by himself oversees $15 billion at Vontobel Asset Management. He joins us from Davie, Florida this morning. Okay, Rajiv, finally, let's talk about the markets, and we're going to start with Europe then, because German GDP number is a big miss. How much trouble is Europe in?
Well, I think the problems are pretty serious and deep. It's not exactly started 2 weeks ago. Obviously, the markets kind of take their own sweet time to react to it. And let's face it, there has not been any concrete proposal so far, including the band-aids that that they proposed today, which is just been a series of same stuff. And I really hate to use the same phrase, kicking the can, but that's exactly what is going on. And there has not been any resolution at all. The question is, how fast does sort of disease keep spreading to the rest of Europe?
That is a very good question, because you're right. We didn't get anything from the Sarkozy-Merkel meeting. No Eurobond, no extra cash for the rescue fund. And now they're proposing something about the financial transaction tax. Well, you talked about clear policy prescription in the U.S. As an investor, what do you want to see that maybe there is some solution to the Eurozone problems?
Well, I think it's as I said, it really is widespread and deep. So the question is how do you resuscitate growth? If you look at Greece wasn't growing from 2000 2007. Italy was barely growing in that period when the whole world was booming, right? So that's the first part of the issue. Second is the indebtedness at the country level, at the sovereign level, which really increased dramatically during the 2008-2009 crisis. The third is lack of or not enough capital at the banking system level. If you look at the French banks, I mean, by and large, they are between 25 to 30 times, if not more, leverage. I'm talking about the reported numbers. So it's kind of surprising that they were not forced to raise more capital. As you know, in our global portfolios, we have not owned any continental European bank for 4+ years. So this has kind of been there for a while.
Yeah, it looks like and you saw the issues coming 4 years ago, Rajiv, or it seems like it. Let me talk to you about, I guess, your concerns as well about the markets. You've shaken off the volatility. You said we've been here before. I guess when you're looking at a flat to no growth for benchmarks around the world, that doesn't concern you as an investor? How do you make money?
No, I think we really have to pick the right spots. I mean, if you talk about emerging markets, I mean, what we saw from 2002 till 2007, early 2008 was an era where multiples multiples expanded and margins expanded. And if you look at, for example, the commodity names, most of them on an average, let's say, were making 20% or less, and they are currently making close to 50% margin. So that obviously the expansion cannot continue. So we feel that the markets are at best not going to go anywhere because of A, margin expansion is behind us, and B, the top line is going to struggle because a bulk of emerging markets is still dependent on developed market growth, and that's not coming anytime soon.
Oh, so it sounds like you're shying away from
stocks,
emerging markets.
I think you can still do well.
Yeah, am I wrong to assume that you're staying away from emerging markets? Because I know you haven't bought into Chinese banks and really other sectors in emerging markets right now.
No, not really. I mean, if you look at our emerging market portfolio, and we manage close to $10 billion in emerging market equities, we find still plenty of opportunities. I mean, they're not as plentiful as they used to be maybe a decade ago, but there are plenty around. The question is, you really have to pick spots. So if you look at Chinese banks, for example, or Asian property names, we have almost no exposure to Asian property. In fact, we own no property names anywhere in the world. Banking system in Asia, the only banking system we feel offers some decent growth along with reasonable valuations is actually one bank in Singapore, one bank in Malaysia, and 3 banks in India. So we really don't have much of banking exposure either. So you really have to pick spots, and that's exactly what we've been doing.
Okay, Rajiv, thank you so much for your time today and sharing your insights. I hope to see you again. Rajiv Jain of Vontobel Asset Management joining us from Davie, Florida.